evening and thank you for joining us again on Capital Market. I'm Temple Ashaju. Thanks a great deal. Now, the week was quite quiet on the equities and, of course, the debt side of the markets. Generally, things were not too good for a lot of investors who actually lost huge billions of naira this week. There were sell-offs on the equity side of things, poor dividend declarations, and unimpressive earnings, actually. All of that really drove the negative performance that we saw this week in the market. On the debt side of the market, investors withheld their fundings on the announcement of a 30-year bonds paper by the Debt Management Office. And of course, elevated liquidity in the bond side and treasury bill side of the market contributed massively to the negative trading week that we saw this time. While the Central Securities Clearing System, that's CSCS, which is also tradable on the NASDOTC platform, has a lot of initiatives to drive up momentum for the capital market depository, and that's in line with the 3-year strategic roadmap released by Mr. Haruna Jallo Waziri, the CEO of that particular company. That was last year, 2018, when he took office. Well, today on the program, we'll draw special focus on this company, which is tradable on the NASDOTC, and of course, a major SRO, that's a self-regulatory organization in the capital market space. All these and more much later on the program, as we start off with a couple of earnings that came into the market this week that we think you should actually get to understand a bit of them in the insurance and of course the airline space. And in the insurance space, we start off with the AXA Mansard earnings, which is audited and is reporting a negative bottom line for the financial year ended December 2018 at 2.48 billion naira after posting a 5% increase in pre-tax profits. Now, the underwriter recorded a gross premium of 33.9 billion naira, higher than the 26.8 billion naira reported in the base year. While earnings per share rose by 11% or 21% to 21 naira 35 kobo, AXA Mansard has no dividend information for investors. The firm had a penalty to grapple with in respect of a regulatory contravention in the calendar year. And Medview Airline is also reporting a decline of 75% in revenue from 36 billion naira to 9.56 billion naira in the 2018 calendar year. Now, the chairman's statement in the audited report reads in part that the 2018 earnings will long be remembered as one of the most challenging in the airline's recent history. Mr. Sheikh Abdul Mohsen Al Tunayan notes that the loss is due to the effects of the economic downturn that continues to impact adversely on operations here in the Nigerian market. Now a bit of the numbers to review this week. We'll start with equities markets. Of course, all-share index this week was down some 4.59%, specifically putting the key benchmark indices at 29,616.38, with an equity capitalization that ended up closing at 11.124 trillion naira. Activity level this week shows volume at 3.544 billion, while the value of transactions for this week, which is presumably higher than what we saw last week, was at 20.264 billion naira, and all that transpired in 19,130 deals. In terms of the sectoral performances, we got all the major 5 sectors in red. The worst performer was the consumer goods segment of the markets, where we saw profits taken and, of course, huge sell-off across the counters of Unilever, PZ, and a whole lot of other companies, Dangote Sugar and Dangote, all of the Dangote companies that you have tradable there, Dangote Flour and Dangote Sugar Refinery. In the industrial goods segment of the market was down 6.48%, banking segment down 6.09%, and of course insurance down 3.86%. The oil and gas experienced the lowest, down some 2.42%. And moving on to the unlisted securities segment of the market, where things were also bearish. USI closed this week at 733.24, down some 3.23%. Market capitalization closed at 526.79 billion naira, with a volume that came in at 1.09 billion. and that was valued at 839.05 million naira. And if you compare to what we had in the preceding trading week, it was higher. The value of the transaction was higher at 507%. We saw 55 deals this time, and we saw just 6 or thereabout of the securities tradable on that 6 out of the 38 securities tradable on that platform experiencing so much sale. Food Concepts this time was the best performer in terms of volume of transaction and of course the value of transaction, as we saw some 1.07 billion units of its shares traded this week on that platform. And for the fixed income side of the market this week, average fixed income yields expanded some 31 basis points week on week to 13.9%, largely driven by the elevation at both ends of the curve. At the short end of the curve, we saw the CBN resuming its liquidity strain with some 526 billion naira worth of OMO sales. These, alongside some higher stop rates at this week's Treasury bills auctions, resulted in a 40 basis points week-on-week jump on average at the secondary side of the market, which ended up settling at 13.54%. But on the flip side, average bond yields expanded some 14 basis points week-on-week to 14.25% on the back of some sell-offs at the long end of the curve. By way of announcements, the Debt Management Office this week also published the bond calendar for the second quarter of the year. And over the second quarter of 2019, the federal government plans to borrow some 300 billion naira, which is 23% lower than the actual and of course 25% lesser than the planned borrowings for Q1 2019. The calendar also shows the introduction of some 2 new issues. That's the federal government April 2029 10-year paper and the April 2049 30-year paper. But specifically, trading yesterday saw interest across, in terms of bonds now, saw interest across the 23rd of February 2028, which experienced some sell-off on Thursday, but a bit of appreciation on Friday. March 2025, 14th of March 2034, and of course, just 54 days valued at 12.49 billion naira yesterday. And for the Treasury bill side of things, we saw some 466 deals yesterday, valued at 132.56 billion naira. So we know that the CSCS, which is the Capital Market Depository, has been embarking on some initiatives lately. And of course, we're joined by guests from that particular side of the market this time. CSCS is an SRO, actually, a self-regulatory organization. And of course, we know that during the week, they also had a bit of a session with registrars, talking about the need to start doing some, to brace up for cybersecurity information on the part of registrars, on the part of brokers and dealers, and a whole lot of all the operators that you have in the capital markets. That some comments from some key experts in the cyber security side of things. We had the likes of Mr. Temitope, Alade, Deloitte Africa, Deloitte Touch precisely, and of course a couple of other folks. At the end of the day, registrars present at that session were able to understand that there will be a committee set up to help see some kind of a shared arrangement between brokers to experience some kind of security going forward. So basically, there are numerous initiatives on the CSCS side of the market, and of course, this is something that we need to get someone to speak to. So we're joined now by Folagbade Adeyemi, who is the head of clearing and settlement operations at CSCS. Good evening. Thank you, great deal, for joining us on the program this evening.
Thank you for having me.
So quickly, let us quickly understand the latest developments and, of course, innovations at the CSCS.
Thank you very much for having me again. In terms of the new initiatives that the CSCS has currently embarked on, we recently had a situation whereby Thomas Murray, who's a rating agency, upgraded us from an A status to an A plus, and it's something we're particularly happy about because it has such a wider ripple effect. The ripple effect goes as far as the market in itself. Thomas Murray is an international organization that looks to assess risk in any organization or institution, especially for a capital market infrastructure like the CSCS is particularly important, because then what becomes necessary is to ascertain the level of risk that exists in that entity. So the significance of that A plus rating is that we had significant upgrades in some categories: financial risk, operational risk, and asset security risk.
So you got quite a lot actually coming on board, the things that hadn't been in place before. You've got a mobile application now that whether retail or institutional investors can actually sign up to. You also have a lot of solutions for registrars. Bring us up to speed with all of this.
So just like you said, we have quite a number of initiatives to actually bring CSCS a little closer to the market itself. The retail end of the market is supposedly requires a stronger last mile strategy, and that's where the mobile app and all this retail registrar solution comes in, because it also features as part of our strategic initiatives, which has to do with customer centricity and process optimization. And mobile app is largely supposed to help individual investors who haven't had access to information on their securities. So it also is in line with how business is currently going to be run going forward in the 2020s and 2030s. Because think about it, prior to now, people had not been able to transact on their mobile phones, but now mobile applications are becoming a lot more popular, and that definitely speaks to CSCS in itself, because we need to now go with the times and evolve with technology as it progresses. And you also mentioned the registrar solution. What it means is that as a capital market utility and infrastructure, we need to be able to talk to our stakeholders in terms of having an electronic platform that easily shares data. And like you said, security is very key. And that speaks to the fact that we also got ISO recertified, which also speaks to data security. Because if we can, as an infrastructure, share data in a very secure manner, it means the market in itself becomes ultimately more secure. And then you now have institutional investors looking at us from the outside saying, there's definitely something good going on in the capital market in Nigeria, and let's start investing a lot more in that.
So that's not about the only thing you're doing. You've got some document management, legal identity, portfolio view, and a whole lot more.
Oh yes, and there's so much going on with the CSCS. Honestly speaking, we do the CSCS is actually registered as a legal entity, provides legal entity identifiers services, which ultimately means that institutionals that transverse between different capital markets need to be identified. I'm sure you remember the 2008 crash. There was a lot of mobility of capital across the markets, especially when you have situations whereby that mobility is unchecked. You can actually have people, unscrupulous funds moving in between markets. So legal entity identifier, it seeks to actually address that problem so that you can identify whatever that entity as it moves across the different spheres of the global financial system. So that's what the CSCS does. And there are only two LOUs in Africa, and CSCS happens to be one, and it's something that we're very proud of. So there's, in terms of what the CSCS can do, I mean, our horizon is definitely widening, because we see the market as having significant opportunities.
Because you are a tradable company. So
and we are a tradable
company. Investors
exactly.
That will be watching out for dividends, because you haven't paid out any dividends. So that's something that we'll really find out how the CSCS is going to make that possible after the short break. Stay with us.